The dangerously divergent interests of Wall Street and Main Street. That's the title of Daniel Altman's article in Foreign Policy magazine, and it lays bare the fundamental misalignment between Wall Street and Main Street. Though written in 2015, its arguments remain alarmingly relevant in today's financial landscape. Altman critiques the disproportionate power and profitability of the financial industry, which employs just 5% of the U.S. workforce, yet garners a staggering 25% of corporate profits, largely through mechanisms that contribute little to real economic productivity. The central thesis is clear. Wall Street thrives on volatility and leverage, while Main Street seeks stability and long-term security. The strategies that benefit financial firms, short-term speculation, high-frequency trading, and exotic derivatives, are antithetical to the needs of everyday investors and families. Wall Street's incentives are structured to reward activity, not outcomes. The more you trade, the more fees they earn, regardless of whether the client actually benefits. Altman emphasizes how the Fed's low interest rate policies, designed to stimulate the economy post-crisis, inadvertently benefited financial institutions far more than average households. Banks and hedge funds could borrow at near zero rates and take on outsized risk with minimum downside. Meanwhile, savers and retirees, those depending on fixed incomes, saw their purchasing power and retirement plans quietly eroded. Perhaps most scathing is Altman's critique of financial media and lobbying. Wall Street executives shape narratives to influence markets and legislation, using technical jargon and selective data to maintain an image of indispensability. Behind the curtain, however, the financial industry is not a neutral steward of capital. It's a profit machine that privatizes gains and socializes losses. Altman also highlights how retail investors are nudged into passive, diluted strategies that offer minimal control or protection. And while diversification is the industry's sacred mantra, it often results in widespread exposure to systematic risk and diminishing returns, especially when paired with high fees and opaque fund structures. The piece concludes by calling for a reevaluation of finance's role in society. Capital formation is critical, but the current system disproportionately serves insiders and erodes public trust. Altman's article is a wake-up call. Wall Street is not your financial ally. Its goals are not aligned with yours. Without structural reform and greater individual awareness, Main Street will continue to subsidize a game it can never win. Thanks for your time, and until next time, be well.